Good morning, traders. My name is Christopher Vecchio, currency analyst with Daily FX. Today is Thursday, January 16th, 2014. These are your FX headlines as we turn the page to North America, and it's a brutal day for the Australian dollar as we see a really poor December labor market print. Taking a look at this here, minus 22.6K on the overall employment change, 10K was expected gain, so huge miss there. And overall now the Aussie looks like it's making a number of significant breaks across the board, and our focus right now is on the Aussie dollar and the pound Aussie. And I say that because we see in Aussie dollar there's a potential for a basing pattern here the last several days, really going back to mid-December. We almost had a break out of this channel right after that week NFP print, but sure enough, no real legs there. Now we're breaking below last year's lows. We're below this, each equivalent rising high in that potential flag. Here we are at 87.87 right now, and it looks like if we get a weekly close below that 88.15.20 region, we could be seeing the next leg of Aussie weakness begin. And ultimately, that would align with what the Reserve Bank of Australia is saying, where they're looking for the Aussie dollar exchange rate to fall closer to 85 over the course of 2014. And yesterday we were discussing pound Aussie as well, and I think there might be a trade coming up there. You know, we're talking about being patient as we had broken that uptrend. We had set a series of lower highs and lower lows. The fake out on Monday was brutal because if you got caught on the downside, which I did for a little bit until Tuesday when I was stopped out when we had a retest of the neckline, sure enough, now we're back through the highs. We made it through the trend line. We go down the hourly chart, we actually see how pretty clear, and this is the circled area on that daily. We see how now we've broken through the series of lower highs. We're now basing on a closing basis at the highest levels since January 8th, above the former closing highs. And I think that's important too. Prices establishing a new equilibrium area. So pound Aussie looks like it may have a little bit rest to do, may give some back because it is overextended and it needs to maybe let some of the momentum catch up with it. That being said, it looks like it's starting to gather for the next leg higher. A test of 186.90, 187 is going to be important. If we see failure, then ultimately we're talking about a failure at a former top, and that would give us hesitance for new highs. Today we have US CPI in the docket, 1.7% expected, unchanged on that headline figure. 1.5% expected from 1.2 in the headline, 1.7 unchanged from the core, and that may help stabilize Fed expectations for this January meeting coming up in just a few weeks' time. So we'll keep an eye on that for today. That's 8:30 Eastern, 13:30 GMT. That's it for today. We'll be back with tomorrow's FX update. Good luck trading, and I'll speak to you then.